This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Vladimir Putin is lending his Kazakh counterpart a hand. The Russian president and his regional allies sent troops to Kazakhstan to quash a bloody nationwide uprising. President Kassym-Jomart Tokayev says order has been restored. Even if that's true, major oil and gas investors like Chevron and Royal Dutch Shell may suffer populist fallout. Paradoxically, high energy prices provide some cover against hasty renegotiation of contracts. Dozens have died in the uprising, which began as a protest against increases in the domestic price of fuel. The situation remains volatile, although the arrival of Russian troops increases the chances of Tokayev prevailing.
Oil prices settled lower on Friday, as the market weighed supply concerns from the unrest in Kazakhstan and outages in Libya against a U.S. jobs report that missed expectations and its potential impact on Federal Reserve policy. Brent crude settled down 24 cents, or 0.3%, to $81.75 a barrel, while U.S. West Texas Intermediate, WTI, crude was down 56 cents, or 0.7%, at $78.90 a barrel. Brent gained 5.2%, while WTI gained 5% in the first week of the year, with prices at their highest since late November, spurred on by the supply concerns.
Moving on to the top news in the energy sector.
Boris Johnson is in the firing line. Like his European counterparts, the British Prime Minister is under pressure to limit the impact of wholesale gas and electricity prices that have quadrupled since last January. He has the bigger headache. Wholesale energy prices only constitute about a third of the bills that customers pay. Even so, users face a shock. The average European household's annual gas and electricity bill will jump by €650 to €1,850 in 2022, according to Bank of America. Differences in energy usage mean customers in some countries like Portugal and Germany will see bills rise by less than the European average. By contrast, the average British user will have to pay over €950 a year more for energy, a 70% increase. The United Kingdom's 29 million households face a combined extra bill of €28 billion. Compare that with Germany, whose 41 million households will have to cough up an extra €23 billion.
Indonesian officials aim to wrap up discussions at the weekend about whether to lift a ban on coal exports, after a minister declared an end to a domestic supply crisis that sent international prices higher this week. The world's biggest thermal coal exporter suspended coal exports on January 1 after Indonesia's state power utility reported dangerously low inventory levels of the fuel, putting Southeast Asia's biggest economy on the brink of widespread power outages. Coordinating Minister for Maritime and Investment Affairs, Luhut Panjaitan, said on Thursday the domestic supply emergency at state utility firm PLN was over, but said the government was still discussing issues related to the ban.
Next, we have the top news in metal.
Global copper smelting activity was steady in December as a slowdown in China was offset by gains elsewhere, including other parts of Asia and North America, data from satellite surveillance of copper plants showed on Friday. Reduced activity in the southwest of China dragged down the overall performance in the world's top refined copper producer, commodities broker Morex and Savant, a satellite analytics service it launched with EarthEye in 2019, said in a statement. But a rebound in other major producers of refined copper helped to steady global activity, they said. Power rationing in China last year led to a decline in the smelting activity, although this has since eased.
An uptick in retail appetite for physical gold prompted dealers in India to charge premiums this week, although new coronavirus restrictions slowed activity, while upcoming Lunar New Year festivities brightened the outlook for sales in Singapore. Dealers in India, the world's second biggest gold consumer after China, charged a premium of up to $1 an ounce over official domestic prices, inclusive of 10.75% import and 3% sales levies, versus last week's $5 discounts, which were the largest in 5 months. There is a modest improvement in demand, but it is still lower than normal, said Mukesh Kothari, director at Mumbai bullion dealer Riddhi City Bullions. We will now look at the top news in the agricultural sector. The La Niña climate phenomenon affected Brazilian soy and corn crops last year and could harm production this year again, according to a Bank of America Securities research note. It said the 2020-21 season has brought opposite climate conditions for Brazil's regions. The center, west and northeast have suffered from heavier rainfall while the south has been hit by drought. We thus see downside risks to current estimates for Brazilian grain supply, which could be supportive of grain prices, the report said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.